Alright guys, so today I'm talking about daily bias and how you can benefit from it. And in my opinion, it's one of the most important concepts. And it's really important if you want to be a good trader. So at first, I also prepared this PDF here. If you want the download link, just let me know in the comments. I can post a download link there. And so let's start with the basics. So at first, the definition. So in general, I would say daily bias, it's the expected direction of the market for the trading day. So what we are trying to do is we predict the daily candle. Somehow we want to predict, okay, how is the price moving? Where's the daily candle closing? What is the high? What is the daily low? And the purpose for this is it provides orientation for traders. So it can help us to align our trades with these buyers. So for example, when I say, okay, my daily buyers are bullish for today, I would like to see good long setups. I don't want to short this. I mean, I don't say when you have bullish daily buyers and you see a nice short setup to say, okay, I don't take this. I mean, sometimes I still do this, but you should focus more on trading in the same direction like the daily candle. Like even your day trades should be in alignment with your daily expectation. And that's it. But now we come to the next step, how to find daily buyers. And I just want to say something at first. So there's not always a clear path. What do I mean by this? I mean, you can follow all these steps. So you can see I prepared step 1 to step number 6 here. You can follow all these steps, but it's a lot of noise. And so you should find some of these steps for yourself. You don't need to use all of them. Same for me. I don't do this every day, but there are some more important steps. And it's not your job to be always right. I mean, you can't predict every daily candle, but you will see somehow it's quite easy most of the time. And the goal is to find a direction. So after we went through all these steps, we want to say, okay, I would prioritize longs or I would prioritize shorts. So we can say after we follow all these steps, okay, I'm bullish or I'm bearish for today. And that's the main goal. So following all these steps, you will only have one outcome, long or short. And so let's start with the first step, trade away from swings. So at first you need to identify swing points on the daily and on the H4 chart. I'm going to explain what a swing is. A swing is confirmed once the candle is closing. And these swings can confirm your buyers and you want to trade away from these swings. So it makes no sense to trade against a swing. So what is a swing? I'm going to delete this here. What is a swing? So currently I'm on the H4 chart. So you can see here, for example, a swing is when a candle sells down against the trend, sweeps liquidity. So we have, for example, a low taken here, low taken here, and same for here. I don't want to mark every candle out. And also, I don't know, somehow maybe there was a fair value gap on the 1 hour chart or something like this. And you can see like this candle here closed really, really bullish. And it's really simple, like this candle created a swing because it swept liquidity but closed really bullish and also above the previous candle. So what I want to say, don't trade against this candle. I mean, you can see we had a sell down here, but for this candle here, you don't want to look for shorts here. You want to look for longs. You want to trade away from this swing here. And same procedure here. So for example, we created a swing here. So we had at first a bullish trend, but then this candle was like, okay, candle swept the high, closed bearish. So this candle created a swing. So the next candle here, you want to look for shorts. You don't want to look for longs anymore. And I think you get it. It's quite simple. And I think actually this is the most important thing. I'm also doing this on the daily chart. So there are also a lot of good examples on the daily chart. Same for here, for example. It's still the 4 hour chart. But you can see uptrend, recreated a swing. Next candle was bearish. You don't want too long here. You want to look for shorts on the next candle. That's pretty simple. And I think, in my opinion, this is the most important concept. And you want to combine this, I don't know, with fair value gaps, liquidity sweeps or something like this, old highs, old lows. And this is, in my opinion, already the most important concept. I think I marked something out here. Also I think this is a great example here. So you can see red and fair value gap here, and yeah, this candle here swept this low, closed bullish, and yeah, we bought up. Sometimes it will not work, and the reason for this is you can see, for example, this one here. This is also a swing, but it failed because the candle was taken out again. One thing I would say, one reason I would say is this candle was still red, so I used the color black, but yeah, this candle is still red. But the another reason is you don't want to, it's really important what kind of candle you're using. So at the moment we're on the 4-hour chart, and this is the 6 a.m. candle, so this is between New York and London. So of course the chance is really low that already during London we set the low for the day. So we see New York went lower again, and then the low was set for the day, and the daily candle started to print higher. So I hope you understand this. But yeah, let's remove this and let's get back to step number 2. And I think that's pretty simple. I want to analyze the general trend. So we want to identify a direction. But that's also important. I don't want to look at all candles. I want to check the last 3 to 4 daily candles. And yeah, just ask yourself, are they bullish, bearish? And how is the momentum looking? Do we have strong bodies or yeah, weak bodies? Do we have long wicks, short wicks? And yeah, that's literally it. So we can just use this example. I mean, for this example here, I used, I think, the last 2 weeks. I just told you guys use the last 3 or 4 days, but I was more like, okay, you can look into the last 2 weeks for the general trend, but when it comes to analyzing the daily candles, you should use only the last 3 to 4. So we can go on the daily chart. And yeah, for example, this is a great example here. So we can see here we had a really strong bullish candle, then a little correction here, and another bullish candle. So I would still assume, okay, the next few days, yeah, will be bullish. And that's quite simple, but it makes a lot of sense. And yeah, and then step number 3, look for old highs and yeah, old lows, liquidity sweeps. That's quite simple, but there's one important thing. I don't really like to use, I mean, I told you guys old lows and old highs, but I'm not talking about weeks ago. So for example, I mean, this high here would make sense, but most of the time on the higher time frame, for example, you will see price just ignoring. For example, this one here, this was in February. So at the moment we have September. You can see price just went through it because price doesn't care if there's a high or a low. It makes more sense to use previous day high or previous week high. These are the liquidity targets that are important for us. I mean, you can still use this one here, but I'm more talking about previous day high. So for example, this high here, or these lows here. So you can see we have stacked lows. So we have this low was not taken out, and also here's a second low. So there's a lot of liquidity. These are the lows we want to target, and these are relevant for us. We don't want to look at highs we had months ago. And yeah, that's literally it. Like it's not complicated. I think I had another example here. I think this was on the 4-hour chart. You can also, I think I told you this, you can also use this on the 4-hour chart. Yeah, so you can see we touched this high here, and we went lower, then we went higher, we swept this high here, and then we went down, we created a swing. We had this example already with the swings. We went lower, so I think you understand this. And yeah, let's start with the next step. So now we are at step number 4. And I already told you guys you should look at the previous 3 or 4 candles, but I think the previous one, so the last one, can say a lot more. So yeah, just look again at how strong was the close. So what is strong? So for example, we don't really want to see a weak close. What is a weak close? This right here. So this candle was still green, closed green, but you can see there was a long wick, so price was already up here, but yeah, buyers were not able to hold price on this level. So yeah, sellers took over. You don't want to long the next candle. Really simple. Is this a bullish candle? Yes, it is. I mean, most of the time I like to have a really long wick here, maybe also that we swap this low. We don't have this here, but in general you can say buyers pushed the price up, and yeah, they were able to keep the price here. So you want to long the next candle, and that's it. And you can do this on the 4-hour chart, but I would recommend to do this on the daily chart. That's a lot easier. And yeah, same for bearish ideas. For example, here, this is a really bearish candle. We swapped all these highs here, and then we closed really bearish. You don't want to long the next candle. Really simple, right? And yeah, and now I think this is also one of the most important steps. So in general, I would say step number 1 is important. Step number 4 and step number 5. I think these are the most important ones. So if it's too much for you, I would really focus on on these steps here. So let's get back to step number 5. So this is, what day is it? I know it sounds weird, but most traders think in weekly cycles, and you should be aware of this. So early in the week, so I'm talking about Monday and Tuesday, markets often consolidate, they build up liquidity and set up for midweek expansion. And midweek, so I'm talking about Wednesday and Thursday, it's more likely to have strong trending moves, and these moves take up the liquidity generated on Monday and Tuesday. And in the end of the week, for example, Friday, it's profit taking, reduced liquidity, consolidation. Sometimes we see a move in the same direction like we had on Wednesday or Thursday. Sometimes we have a reversal, but you should be aware, okay, what day is it? What was the price action before? What could happen today? So I prepared a setup. I will show this. And this can also have an impact on your bias. So for example, if it's early in the week, be cautious with expecting strong continuation or huge swings. Maybe set your TP a bit lower, like get out early. If it's midweek, you can expect stronger moves, directional moves, reversals, manipulation. You can go for the full swing. And on Friday, watch for reversals, price returning to equilibrium levels, stuff like this. Don't focus too much on predicting on what based on what day it is, but just try to keep it in your mind. So I prepared a nice example here. Where is it? It's here. And you can see we have number 1 to 5 here, and then we start with 1 to 5 here. And these are the days. So we have Monday here at 1, Tuesday, Wednesday, Thursday, Friday. Let's focus on the first week, just ignore the second week. And we can see, okay, on Monday, so at 1, I marked out this with the gray box here. You can see we had a consolidation. Then Tuesday, I would still call this generating liquidity or accumulation, but this day created the low of the week. But you can see once we set this manipulation, so we swapped out this low here, for example, and also Monday low. Once we set up the manipulation, we had a clear trend. This was up, so we had consolidation, manipulation, and then distribution. And you can see most of the price action, was happened after the manipulation. And these two phases, so the red one and the blue phases, most of the time happens during the week and not on Monday. Most of the time it's Wednesday, Thursday. So you can see after this manipulation, the trend was quite clear. And let's get back to the second example. So we have here on the day 1, this is Monday again, and we have 5 Friday. So you can see in the first 2 days, we had accumulation again, generating liquidity. And then just compare Wednesday and Thursday, you can see there's a lot more going on. Like there are a lot more trades. And that's what I mean. During accumulation, you want to look for quick shorts, quick scalps, or don't go for the full target. And day number 3 or 4, so Wednesday and Thursday, you can go for the full swing. You can have like big targets. I mean, don't target too much, so it should make sense, but you don't expect too much price action on the days before. And you can see on Friday there was also a lot going on, but yeah, it depends. Like you can see Friday here was really weak, here it was a lot stronger. And yeah, that's it. If you have any questions about this, just let me know. And step number 6, I would say it's not that important, but it can still play a big role. It's about news events. And what I want to say is, yeah, buyers can change once news are out. So you can have the best buyers once there's a high impact event like FOMC, CPI, or NFP. Like it makes like they don't care about your daily buyers. So yeah, once the news are out, your daily buyers can be invalid in a couple of seconds. So I would always wait, and I also wrote down here pre-news behavior. Often they consolidate or accumulate liquidity before the major news event, and there are also a lot of false moves. So I would just skip this. And post news, you can trade this. That's also what I do most of the time, but most of the time, yeah, I wait 1 or 2 hours. But yeah, in general, this video is about daily buyers and not how to trade news. But what I want to say, yeah, always check if there are any news, because these news events really can change your buyers. And that's it. So yeah, if you like this video, subscribe. There will be a part number 2 about daily buyers, and if you like these kind of type of educational videos, just let a comment there. And if you want this PDF, just let me know. I can post a download link in the description.